Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I am not here on Thursday. Obviously, we will have a rerun. The markets are closed, and I'm going up north to see my family for Thanksgiving. And I wish all of you a happy Thanksgiving. But let's just talk about today. So I'm here every Tuesday and Thursday from 1:30 to 2. And I have to tell you that in my career, I'm seeing in my 41 plus years, I'm seeing so many people from around the world reaching out to me that want to learn how to trade futures. And whether they're struggling trading options or just newbies that want to learn, or there are people who are trading equities and that want to really learn how to start trading futures. It's such a joy to see that, because futures for me are, in my opinion, one of the greatest asset. Even though I traded probably close to 2 billion shares in my life, I will tell you that trading futures is my favorite asset. All right. Now, with that being said, I spent close to 10 years of my life building the software that you're going to see here. And I use this every single day in my live stream, where people from around the world have access to my technical studies and my chart overlay, which I built on some different applications. Here you'll see it on TradingView. And what's really important, okay, is for those of you who are new, I have the way I look at the market intraday. I look at what's called a trend. These are the 5 conditions: a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. Of the 5 conditions are made up of using the 15 to 30 and the 60-minute time frame, and then I use the smaller time frames like the 15 or the 5, 3, 5, and 15 for trades, for these pullbacks and bounces where I'll be looking to buy them and short them. And then I have, of the 5 conditions, there are 2 strategies: a buy and a sell divergence. each strategy, there are multiple strategies of the buy and sell divergences, but that's what I broke it down to. So 5 conditions and 10 strategies, 2 for each condition. Now, one of the things I've always told people, and I've dealt with the biggest traders in the world, and they're actually a couple of them are friends of mine. And I said, and we have such a mutual respect. And I said, one of the things that's really important, okay, is to understand using multiple time frames and looking at which I call combination methodologies, right? Combination strategies, methodologies. So I studied for nearly 10 years of my life building this overlay, studying in real time, not back testing, always forward testing. I'm not a believer in back testing at all. Too coincidental on results, and I'm not really a fan of that, right? Everything we do is based upon pure mathematics. There is no guesswork. Take the emotion out. And what I tell everybody is you trade what you see, right? You trade what you see. And that is really super important, okay? That is really super important. And when you are able to identify these patterns in such a magnitude, in such a way, you'll be able to recognize and see for yourself the true meaning of trading, and giving you the confidence by looking at patterns. So today, for example, I know we're not trading, this is not future related, and I'm going to get into it because there's so many great patterns here on the S&P, the spiders, on oil and gold, because that's what we look at in the live stream, in 30-year bonds and the YM, and also the patterns on the like the Russell, which is great, unbelievable patterns on the Russell. Okay. And so what you want to be able to do, okay, and is to take a step back, identify these trades. So for example, if you're looking here right now at the spiders, the SPY right here. All right. So this morning I knew that if the algorithm reversed to buy on the 15-minute time frame, it would have correlated to buy with the 30 and the 60-minute time frame. Okay. And so when I got that pattern, okay, when I got that buy, I knew the first pullback. Now, this is when the 15, the third, now the 15 reversed to buy, as I showed you. It correlated with the 30 and the 60-minute time frame. So then what you do after that, you go and you look to buy the first pullback on the 5-minute time frame, and bingo, S&Ps, we bought them when everybody was dumping them at 12 and a half, 13 and a half, 14 and a half, whatever. We were buying them. I said, look to buy them here, right? Whether you're trading the spiders or the S&P. In the case, the index futures, you can see this monster move up here. And you can see this is the first pullback on the 5-minute after the 15-minute time frame correlated with the 30 and the 60-minute. And then again, here's another little pullback on the 5-minute. And then we got another pullback here on the 5-minute. So we had 3 great pullbacks on the 5-minute time frame. But more importantly, we're now going to wait for the pullback on the 15-minute time frame. And you can see the 15-minute time frame starting to roll over right here. All right. Now you have a little bit of a couple of sell divergences here. You're making new highs here. And you can see if I draw my horizontal line there, when the S&Ps hit the 32 handle, they just dropped 4 points on the S&P. You have what's called a non-confirmation. So you're making new highs. The MACDs are above the pivot, my pivot line, which is a solid white line, the pivot line. You can see the MACDs are negative above the pivot on the 15, on the 5, I'm sorry, and they're positive above here. But when you see they made new highs right here, and I'll leave my dotted white line, I knew that was a sell divergence. So basically, could have scalped the short on the spiders, on the S&P there. And that spike, that push right there, that push right there, remarkably, okay, was really was a non-confirmation move, right? So if you're long the S&Ps, let's say on the last pullback right here on the 5-minute, okay, and you can see right here at the right here, let's say you bought this little pullback here, okay, right here, and you can see exactly they ran 10 handles, 10 points, which is 1 point on the spiders. So you would basically know that, you know, I'd be looking to get out. Now, normally my trades last anywhere from 1 to 8 bars. I don't look at candles, right? It's never been something I was a fan of. I just love the color green. I want to keep it simple. But if you look here, 1, 2, 3, 4, 5, 6, 7, 8 bars, and that was the high. So anywhere, if you're looking at a 5-minute time frame, anywhere from 1 minute to 40 minutes, a 3-minute, anywhere from 1 minute to 24 minutes, and on a 15-minute bar, anywhere from 15 minutes up to 2 hours. So that's how I look at everything, predicated on the fact that the time frames are all predicated on, looking at the time intervals of up to 8 bars on a trade. You can get out after 3, you can get out after 4, you can get after 5, and you can just keep raising your stops as the trade's going in your favor, okay? So today, we got the buy reversal on the spiders on the 15, and we got some really great pullbacks 3 times, 1, 2, 3, maybe 4, but I would say a solid 3. I want to show you the GLDs here today. Okay, so gold, I write for Bloomberg for a big institutional friend of mine who goes out to about 2,500 institutions. And I did my work on the daily chart. Now, I missed the long on the gold by about maybe 25 or 30 points, but I knew we were deeply oversold. I was looking for one more push down, and we got this 150-point rally, $150 rally on gold. But when we got that extreme oversold condition and that rally up, and then we got this really bearish pattern on the daily, I posted that anything above, I believe, 27.10 on gold, I'd be looking at exit longs and look to start and creating and establishing short positions on the GLDs and or the actual gold futures for the institutions, right? And also, I said it in my live stream as well. And so today, And then yesterday, we had over a $93 drop in gold. From Friday's call to $93 drop in gold. Today, we're up about maybe 3. We were up earlier in the morning, but that faded. That didn't last long. Because I want to show you something right here. If you look at the GLDs here, okay, you can see we had this big gap down yesterday. You can see the 60-minute time frame. All right, and I'm just going to change up because I know a lot of times we talk about the index futures, the S&P and the Nasdaq futures, right? But I wanted to show you the move here on gold, right? So the GLDs reversed to sell on the 30, on the 60 and the 30. But look at this beautiful short pattern right here on the 60-minute time frame, getting overbought, okay, on indicator 3, which is my overbought oversold oscillator. Gold's making new lows as we speak. Okay, and then you can see the 30-minute time frame right here was a short above the 243, which equaled on the gold futures probably, I think it was above the 26.58. Now gold is down $13 since that 26.58. Okay, and if you really do the math on this, that's staggering. That is absolutely staggering, okay? And I'm going to mix it up a little bit because after this, I'm going to go into gold, into oil, okay? This is why it's important. If you're going to trade the continuous contracts, which trade nearly 24 hours in a day, and during the U.S. session, it is important, based upon the mathematical calculations I have created using this software, to use the underlying ETFs during the U.S. session. It is important. I've taught this to some of the top hedge fund traders in the world. And so please, if it's good enough for me to teach them, it's good enough for me to teach you, because I ain't teaching them anything different than I would teach you, right? So it is important and vital to really take the time, the effort to learn. And my phone blows up every day I get out of work from people all around the world. And I answer people accordingly depending on my time schedule, but I've never, till this day, never returned a text or a call. That doesn't mean I return a call or a text a week or two later. It's within the 24-hour window. And I am noted for that. I'm up early in the morning. I'll text and I'll call people and I'll set a time if it's early in the morning. If it's somebody from Europe, they're up, boom, I talk to them, or from another part of the world, I end up talking to them. So it's really important to be very transparent with people, to be able to communicate with people, because again, as I said over and over, my legacy depends on your success. Okay. All right. So again, being everybody who's rushing to buy gold today, I'm like, no way. Nothing but shorts. Nothing but shorts since the pre-market from 8 to 9, and nothing but shorts all morning long. And when these 30-minute time frames kicked in, I'm like, okay. Now, again, you can see the 30 and the 60-minute time frames reversed to sell, okay, from yesterday, and all gold has done is gone down yesterday and faded the rally today. Okay. All right. Let me just see something here. That's 4. And this is. That's 2. 4 and 2. Okay. Now, another thing to be cognizant of, okay, and I'm going to show you crude oil, okay? But before I show you crude, I want to type in the USOs here, okay? So we can see the USOs here, okay? Same thing. The USOs are the underlying ETF, which you may or may not trade, but who cares? It's going to give you the same information, but better. Now, the one thing I'm going to take a step back on is the fact that when you're looking at the underlying ETFs, whether it's the spiders, the Qs, the Russell, the USOs, the GLDs, the diamonds, anything that has a continuous contract attached, it's imperative to look at. I do not look at pre or post market data on these instruments, okay? I only look at from 9:30 to 4, and that is called RTH, real-time hours. And the research I have done is really important because when you have the real-time hours that you're looking at in the market from 9:30 to 4 versus the continuous contract, which is nearly 24 hours in a day, it's important that you recognize and realize, okay, that when they align, it's very, very powerful. Excuse me. Grab some water here. Sorry. Okay, all I do is speak all day long, so a lot of times my throat gets a little irritated. So I apologize about that. So here we go. So now you can see the big move here on the USOs, right? From the gap up all the way down. Now they dropped about $1.50. That's a monstrous move, okay, on the USOs. Oil was actually up on the day, but let me show you something here. I'm going to shift this over really quickly here, okay? And I'm going to change the time frame to the 15-minute time frame. And there it is. The 15-minute time frame reversed to sell on my indicator 4, correlating with the 30 and the 60-minute time frame. So what you'd normally do is you take the first bounce to look to get the short, and there it is. But watch what I'm going to show you, okay? Watch what I'm going to show you. The 15 to 30 and the 60-minute time frames on the underlying ETF USOs are in sell mode, right? But now watch what I'm going to show you. Look at the crude oil right here on the 15-minute time frame, right there. When the 15-minute time frame reversed to sell on the S&Ps, I would short them 32 to 36, 37 here if you get another push up here again. But if you look carefully, when the 15-minute time frame reversed to sell on crude oil right here, sorry, that was a 5-minute right here, okay? Here is the bounce to get short on crude, and that was roughly right here. What's the price? I think it's about 69.80. You can see the gigantic drop of about $1.40. It never told. Once that 15-minute time frame on crude oil reversed to sell, correlating with the underlying ETF, the USOs, on the 15, the 30, and the hourly, all bets were off. And there it is. You short the first bounce on the 15-minute time frame. You can see crude oil got absolutely kabooshed. Okay, kabooshed. It's a word that I came up with. I'm in the Urban Dictionary, and if you don't believe me, take the picture of my kids down. It's right here, kabooshed. Okay, and actually the definition is when a stock and or a security has reached an overbought condition, peak price, or otherwise hit with news or significant that a sell-off occurs, causing a drop in the price of the security. In this case, it's just pure technical. In this case, it's just pure technical that we were able to identify this using my software to the point that I'm able to see the pattern. It aligned the 15-minute time frame on the crude oil, okay, on the 15 continuous contract, correlated with the underlying ETFs on the 15 to 30 and the hourly. You got to be insane to be buying this crude. And all it did was go down, 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 down. Now, along the way, we were able to see patterns on the 5-minute time frames right here. This is the first bounce on the 5-minute after the 15-minute time frames correlated. You can see the price here around the 69.5, and it never told you that once to be long crude. Okay, so again, using the technology and the ability to have the proper technology to give you the best results in your trading. Very important. I want to show you another great pattern. For those of you who may want to trade the RTYs, which is the Russell futures, and a lot of people do. My favorite is the S&P futures, hands down. I'm not really a true fan of the NASDAQ. I mean, yes, I have people who trade the NASDAQ. We looked at the NASDAQ and we call the NASDAQ. I like to trade the Qs or the TQs and I like the underlying S&P futures for that matter. But if you look here, okay, if you look here, all right, you can see here let's look at the IWMs here, okay, the Russell, okay, that's the 5 minute. I'm going to shift this up to the 15. Let me just do this here. I'm going to make this the 30-minute. Okay, I'm going to make this the 15. Let me click on this to make this the 15. Okay, and I'm just mixing this up a little bit here. Okay, so here you can see the Russell, okay, the IWMs. We came in, let me just move this over a bit here. Okay, so we came in, and you can see right here how the 15-minute time frame we gapped down. Okay, we gapped down on the IWMs, which is okay, and then you can see here, okay, that the 15-minute time frame correlated with the 30-minute, right? But watch this, all right? So you see the overbought condition on the 15, all right? And that also set up on the short on the 30-minute. But watch this, though, okay? So I already know that I'm bearish on the 15 and the 30-minute, but now look at this. Look at this. The 60-minute time frame reversed to sell into, and look at the negative MACD on the 60. So when the 60-minute time frame correlated to sell right here, if you can see it from here, okay, you look to short the first bounce on the 15 and the 30-minute time frame, and the IWMs dropped roughly $1. So that was a big move on the RTYs to the downside, a very, very big move on the downside. Okay. Again, when you have the ability, okay, to recognize these patterns, and again using multiple time frames, okay, it's important to understand that when you're trading the market, right, to identify these patterns, to identify the move down, okay, and when you have that ability, okay, when you have that ability to see the trades in the way that you have it set, that we have it set, okay, it's important to recognize that that when you're able to see the Russell, knowing that the 60-minute time frame reversed to sell, it correlated with the 30, it correlated with the 15, okay, guess what? Okay, there you have it. Now you have the ability to recognize the pattern, have the ability to recognize the move, and that move, okay, is very powerful. Okay, so it's very, very important to see how using multiple time frames gives you the best ability to use and using the smaller time frames. In this case, when we got that 60-minute reversing on the IWMs, you short the first bounce on the 15 and or the 30. At that time, when the 15s got overbought, what had happened? Boom, you got the move predicated on the 15 and the 30-minute time frame synchronizing at the same time. Does anybody have any questions? Okay. Again, my number is 914-500-7484. It gives me great joy to do this every Tuesday and Thursday from 1:30 to 2. I got to tell you, I can't keep up with the amount of people that are really wanting to learn how to trade futures. Tradier Futures is a remarkable platform. They have great rates and great margin. A lot of these big member firms, I'm not going to mention them by name, but a lot of these big member firms, you know, I know them, I can see them. I'm not going to mention them, but they have, you know, staggering margin requirements, 8, 9, 10,000. And if the fast markets and the markets are really, really moving, they raise their margin rates. But Tradier Futures, I've known them here for more than a decade. They're good people. That's why I chose to work here with them and to really help enhance your trading. Again, my legacy depends on your success. I do a live stream every day from 9 to 4. There are some days the markets are moving so fast, I don't even have time to breathe. So forget about getting anything to eat. Once in a blue moon, I'll run out and I'll get a smoothie for like maybe 15, 20 minutes right down the street. But again, it's important that each and every one of you, okay, really learn from someone who trades every single day, okay, who has got over 41 years of experience, who can give you the confidence, okay, by working with someone like myself, teaching you, guiding you, and also then helping you with your discipline factor, and also giving you the confidence based upon the technology that I've created some many years ago. And for me, there's no greater joy in my life than to wake up every morning, because every single day is a different day. Every single day I want to be able to help people, and that gives me really great a great joy in my life. And that to me is why I want to wake up every single day. And I don't have any great regrets. 42 years come August 1st of 2025. And you know what? I'm blessed. I'm blessed. I love it. There's nothing greater there's nothing that I would want to do other than be able to teach each and every one of you, to make you all successful futures traders, and to be able to grow the amount of people at Tradier Futures, to be able to give them the ability to have me at your convenience here at Back to the Futures. Does anybody have any questions? We have 3 minutes to go here. Before we leave, I want to wish all of you a happy Thanksgiving, and really enjoy your family, watch football, overeat, and then have another. There's nothing better on Thanksgiving that I remember, and I got goosebumps from that, is to have, you eat, between your 2, 3, 4, but there's nothing, and I don't overeat, trust me, right? But then to be able at 9:30, 10 o'clock to go and pick a bone, a drumstick, and just sit there and watch some TV with your family and your friends, right? But again, it's the most important thing is to be able to enjoy your time with your family, your children, and be blessed to think how fortunate we are. And I am. And I just want all of you to know that I'm very appreciative to be here each Tuesday and Thursday from 1:30 to 2. If nobody has any more questions, I want to say thank you. God bless. God bless the United States. Thank you for all our veterans and those who are serving. Enjoy your family, everybody. God bless. I will see you here next Tuesday. Thursday, we will have reruns, but S&Ps, if you're short, I look to cover these 29-31 range. If you're short at 32, oh my God, look at this. Beautiful pattern. Again, if you have any questions, please text me or call me at 914-500-7484. God bless you all, everybody. Be well. Happy Thanksgiving, and God bless the United States of America. Be well, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.